Abdulaziz, thank you so much for joining us as actually our first new VC. And as a brief introduction to our audience, welcome. This is the first in our Ramadan night series with new VCs in the Middle East region. We've seen a large number of funds launch in the last 12, 18 months. There's a lot of excitement around this space right now. And we wanted to take the opportunity to introduce our audience, the investor community, the entrepreneurs themselves to the new funds, let them know what these funds are looking for, how they're thinking about investments, and giving you a better sense of who might be a good fit for your startup or an interesting partner for your opportunity. And we're thrilled to have with us our first session, Abdulaziz Al-Turki, the managing partner of Khwarizmi Ventures. Abdulaziz, welcome.
Thank you so much, Omar. It's a pleasure to be here with you. It's a pleasure to start this series. And hopefully we can give from our end what the audience are seeking.
Wonderful. I'm sure we will. And, let's dive right in. And we want to hear your story, actually, your background. How did you get to becoming a VC as a first step? Tell us about your career that led you to this point. And then maybe you can tell us about the first investment that you did that got you really excited about venture capital.
Amazing. So, yeah, it's a bit an unorthodox way of getting to VC, I would say. As you may know, right now it's a booming time for VC, and a lot of things is happening. My background doesn't necessarily fit with the traditional VC route. So I started as an electrical engineer. I graduated from the US back in 2010. At the time, the best available opportunities in Saudi was either Aramco or SABIC. So I joined SABIC. I spent some time there. I worked in project management for a while. I led a few projects over there in construction and so on. That, in a way, taught me many different skills, like dealing with procurement and supply of material and getting your hands dirty with actual construction and people management. But it was clearly not a long-term career path for me. I moved within SABIC to a more of a business role. So I went to the joint venture management department over there. I spent some time with SABIC representative in joint ventures and board members, preparing them for board meetings. That experience taught me a lot about governance, involvement with legal, with the board, and how companies prepare for board meetings and so on. After that, it was around the time where the Vision 2030 start, where a lot of the public sector entities starting to really switch gears and move to, government-wide change in culture and very ambitious targets and very few people to execute them. So it was like a booming sector for consulting to come and support the leaders of these organizations to achieve these ambitious targets. I joined Elixir, which is a McKinsey company, mainly focused on implementation. And I worked with them with several public entities, mostly in Saudi, but also in UAE, to achieve their ambitious targets that will transform the country to the 2030 vision. I worked in labor sector, in strategy, but most of my time was in the financial sector, where I spent a lot of time reviewing government projects in terms of feasibility and diligence and ability to execute on their projects that they basically ask for government funding on. where there was a lot of similarities to what currently we do in VC. After my consulting experience, I moved to London Business School. It was a move that's life-changing move where since the beginning I started, I fall in love with like the startups ecosystem. I worked in London while studying with 3 different startups in London. In the summer, I've worked with a VC here in the region, along with a startup in the region. And basically, with all of that happening, it also was the right time for in the region where a lot of VCs were coming in. A lot of people were starting their own tech startups. The money was there. The startups were increasing. And the sector was ready to be disrupted, and basically it was in the rise. So it was the right time for me to join Khwarizmi. Khwarizmi itself was existed before I joined as a corporate VC, but when I joined forces with them, the idea was to take it to the next level and institutionalize it and raise funds from others. And grow it to be one of the leading VCs in the region.
Amazing. And you set me up perfectly for my next question, which is to tell us a little bit more about Khwarizmi, and in particular, tell us about your fund thesis, right? What is it that you're looking for? What kind of deals do you do? What kind of ticket size do you write? What kind of geographies are you open to? And then what I'd love to hear from you is pick 2 or 3 sectors that you're really excited about, and then maybe 2 or 3 sectors where you say, I'm not touching this.
Great. So let me start with Khwarizmi. So Khwarizmi, as I mentioned, started before I joined. There was a couple of successful investments that was done in a period, in a 2-3 years period, but it was not really, there was not a proper like a VC setup there. It was mostly opportunistic opportunities as it comes. So when I first started, we gathered together with the founding partners to think about what's the right investment strategy. There was a lot of factors to consider. It's the VC or the tech scene in the region is still getting started. That created a lot of opportunity in early stage companies where there is a lot of deal flow there, while very limited in the later stage, like Series B and beyond. So that answered kind of the question of which stages we get in. We decided to go into between seed and Series A stages. That includes post-seed, pre-Series A, whatever you want to call it. But what qualifies as a seed, because everyone kind of chooses whatever name they want.
I just saw someone in Egypt, they had a Series A pay mob, sorry, for $18 million Series A. I was like, that is quite a big Series A.
Yeah, but this number is quite normal if you see the value, for example, for Series A.
Yeah, for sure.
It depends. It's case by case, and sometimes there are other reasons like PR or others just to make it sounds like it's a great investment, because look at how much they made in Series A, so that creates a good sound to it in the future. But for us, what qualifies as seed is definitely having a developed product, showed initial signs of product market fit through clear month-to-month traction. This doesn't necessarily mean revenue generating, because in some cases the essence of the model doesn't call for an early. It might not be a good strategy for you to get revenue right away, but as long as you show clear traction in the beginning with a developed product, obviously a committed team and then the solid team, then that qualifies for seed. And by Series A, we mean obviously you're in a position where you have already set your ground in one market and you're ready to expand to other markets or other products. And typically that means a round that doesn't exceed 10 to 15 million in terms of the asked fund, and a valuation no more than 50 to 60 million dollars.
Okay. And tell us about sectors. I mean, I feel like there's a lot going on in fintech. Everyone loves fintech. People like e-commerce. People hate e-commerce. What do you love? What do you hate?
Yeah, so just to conclude the strategy regarding sectors, we're pretty sector agnostic. We realize within this time it's going to be very limited if you focus only in a sector or two in what you're seeking, because simple math or simple logic, there is just not that much density per sector today in terms of deal flow. However, what the sectors we like the most, it's kind of an equation with the resources we have. So our founding partners and our advisors are really expert in few sectors. So for example, logistics, this is an area where obviously tech-enabled logistics, it's an area where we have made successful investments in the past, where we have regional know-how and support, where it's going to be very compatible to and a lot of value add services that can be there. This goes hands on hands with e-commerce, because logistics and e-commerce are so much interlinked. What we end up having is that a lot of the logistics that we are in touch with, they can support e-commerce quite well. We're also very excited about fintech. I know it's everyone's interest, but it's also, there is so much.
Are there specific places within fintech that you think are exciting? As specific sub areas? Crypto, debt, B2B.
Well, there is just so much to be disrupted in fintech, and from what we've seen, so we've already invested in a few fintech companies, whether in buy now, pay later, whether in there are other ones that that allows for smart and innovative solution for money transfer, but again, the fintech space is very disruptive. We have looked into so many different companies that we're really excited about, from Nubank, SME financing, payments, and different innovative payment solutions, and we're open to all of these, to be honest. And there is just so much to be done, and just basically being hands-on on this deal flow just honestly fills me with energy. Like, it's so much. Every day you meet a new exciting startup with a solid team. You can see with them that the problem they're trying to solve, the ambition, and how these startups can really dominate the world in the future. We all see what's happening in the US, and to me, I think what's happening with us now is just we're a few years behind, obviously, relatively speaking. But as of now, the top companies in the US are all tech companies. The companies that issues for IPO and successful IPOs are in majority tech companies. I really envision this to be our future in the region. We're yet to see this, but
so that someone young like you coming back from where they were studying, instead of saying I want to work for SABIC or Aramco, they say I'm going to work for the next big Saudi tech company.
Absolutely. I mean, the opportunities is great. The trajectory of the industry is just I mean, it's full of potential, and I think there is just so much opportunity over here for us to capture, and that's the main reason why I chose VC at the end of the day.
Wonderful, wonderful. I have a few more questions for you, but I'm going to switch up the pace a little bit. And
Sure.
I want to ask some questions and try to get really fast responses from you. Let's say like 30-second answers if possible. And the questions are really, I'm going to ask you for the top number one thing to try to help you out, because there's often many answers. But let's go.
That sounds tough, but let's see.
Okay, great. Let's start with one thing that would make you immediately dismiss a startup. Can be about their pitch, okay, the founding team, the business itself. One thing where you're like, okay, nope.
It has to be in the founding team, and I'm biased because the sector, the stages I'm looking at, the number one thing we look at is the founding team. So, for example, if the founder is not full-time or not willing to be full-time, that's a clear no. The percentage of ownership in a seed stage, if it's for the founding team, if it's not more than 60-70%, for Series A, if it's not more than 50%, that's a question mark.
Okay, great. What is the number one challenge that you think entrepreneurs underestimate as they're building their startups?
Interesting. So I think entrepreneurs in early stages, they focus on early growth and early traction that can be achieved through non-sustainable ways. Like, for example, heavy spending on marketing. If that happened, that would get them, for example, up to a certain level to Series A or Series B, but without sustainable sustainable model that really focuses on proper customer acquisition and customer satisfaction in a way to make them your own promoters and stick with your product, that can evaporate so fast if you stop the spending on marketing, for example.
Okay, so don't get high on customers that you're buying from marketing.
Absolutely.
So another question: what's the biggest challenge facing the regional startup ecosystem today? And I mean, I can throw some options at you: funding availability, talent, access to customers, regulation, or another one totally different than what I mentioned.
This could be sector specific, but if I had to choose one, it's going to be talent. And I'm particularly biased with Saudi with this answer. I think in Saudi there is a bit of fight to get the top talent. There is definitely lack of tech talent, and even others. There is a huge competition to get the top talents out of college or out of the labor market, between semi-government jobs, between consulting, between banking and others. And what's particularly I wish that everyone sees is the medium-term rewards that tech startups provide, not even long-term. So if someone is getting right after college to a job, they can work in a startup. They get close and they see the ecosystem there. 3-4 years from now, they can be a really solid founder that can raise any funds and grow a company that is 100 million plus in valuation, which can be much more rewarding than the other options they have.
Great. Tell us about a regional company that our audience may not know about, and should be early-ish stage. We're not talking about Kareem or Anghami, but that you think is a unicorn in the making. You'd be willing to bet on it. And if it's in your portfolio, give me one that's not in your portfolio. You can give me one also in your portfolio.
If there was a one, I want to keep it a secret, Omar, until we close it.
Okay.
But
any company or a company that's in your portfolio, or a company maybe that's past where you are right now, but you think you missed that one. That was a really good one.
Well, I think there are really multiple ones. In Saudi, there is a couple of startups. They're clearly on their way to be giants like Sari and Foodex. There are a couple in, for example, in Egypt, there is one we've been looking at called Thunder. They're trying to be the next Robin Hood of the region. There is obviously in Dubai there are quite a few, but let me stop at this. I don't want to.
Okay, good. I love it. I got an answer though. That was a good one. Tell us about a global startup that you're watching carefully and that you think is really disruptive and why it's disruptive. And again, I don't want like a Robin Hood. Okay, fine. We all know Robin Hood. Give me one that you think we might not know as much as possible. I know I'm asking a lot.
There is one that I was interested in when I was in London. I considered joining them, but I guess I didn't end up joining. It was a company that basically democratized or they're trying to democratize the cryptocurrency investments. It's called Mode Bank, and with everything we see now in crypto, they had a really nice product. Basically, they make crypto investments as simple as any other investment that you can make. It's simple if I click on a button on your phone. There are a couple of other companies that are trying to do this, but that's one maybe that is less known than others.
That's amazing, and I think crypto is, people are really hot on crypto right now, in every kind, and NFTs, and so I think that's a great one. Tell us about a common mistake that entrepreneurs often make when approaching investors.
Being overprotective of sharing, that can lose them sometimes opportunities. A lot of the time, it's not about the idea, or it's not about what you did so far that you need to protect. Being open about it just will create more opportunity than the fear that some entrepreneurs have from sharing what they have. So, for example, insisting in signing NDAs, this is something that VCs will never do, and that's shouldn't be a concern for entrepreneurs. But the ones who are mature enough, they've been in the space for a while, they know this already. So it's not a common problem with the mature entrepreneurs.
Great. Audience, if you'd like to ask questions, please, if you'll put your questions in the Q&A feature, please go ahead and add any questions, and I'll try to get through those. Meanwhile, I'll continue. I'll have one more rapid fire one for you, which is, tell us about a time that you lost money on an investment, or you made a bet that turned out to be not the right bet, and what you learned from that. And you don't have to tell us the company, but tell us maybe a little bit about the investment, and more importantly, what it taught you.
There are a couple in mind. One of them was a boring answer, which is Corona or COVID-19 basically came out of nowhere and disrupted the core of the business. The other one was a company that basically had the wrong business model to start with. It started based on an issue of like they were kind of trying to get like an arbitrage, but not particularly, but solving an issue that a technical issue that if the original person who had that technical issue is fixed on his own, kind of the business model will be disrupted. And the whole company, and that's exactly what happened. So that issue was fixed, and then the company
they became a feature instead of a company. They were featureized and goodbye. Okay, great. Thank you so much for that. I love the candid answers, and I appreciate it. It was really fun. I want to go back to a little bit of more the open-ended questions, and we've seen all of these new funds launched in the MENA. Would love to hear, what makes Khwarizmi special? What is going to be your special sauce? Why should startups come to you? We often hear the startups pitch. We should hear the VCs pitch sometime.
Yeah, great question, honestly. And we are trying to do things differently in Khwarizmi. And the way we're doing it, honestly, VC is a people's game. So it's all about who you have in the team and the mindset they have, and how much they can give for a startup. So one thing in Khwarizmi we're trying to solve is the lack of responsiveness from VCs. So a lot of entrepreneurs complain about VCs taking a long time to get them an answer, either yes or no. We promise that. So in a magnet survey, I guess there was the average time was between, I think, 6 to 9 months for an entrepreneur wasting time just to raise funds rather than focusing on their business. We're trying to solve this and become closer to the global standard in the US, for example, where it's in seed level, it's no more than 3 months. And that's what we're currently doing, assuming that we will go all the way with the company, with the DD and all. We try to get back to them with maximum 3 months. And most of the time, it's 2 months or less. And the way how we do this is by having a tier A team in terms of associates and analysts who comes with passion and skills to get things done fast and to ask the right question early. And we couple those team members with also tier A advisors. So our advisors come from Silicon Valley and Dubai and Egypt to complement our expertise and to help us with the deal flow and diligence. And they all come with top degrees, experience in VCs and in entrepreneurship, where they can help us ask the right questions in the due diligence and assess with the decision making of the investment. They can also, which takes me to the second part, other than number one, responding fast, number two, being value add. So all of our advisors are like committed to also support in strategies and developing with the portfolio companies in future and share their knowledge with them. We also, as a third option, help companies who wants to expand. We have made several partnerships in Saudi. So to make us like, the target is to be a strategic partner for anyone who wants to expand in Saudi. We have made agreements with the Ministry of Investments to basically make reduce the fees for international companies wanting to expand and invest in Saudi. We have also agreements with talent acquisition sources like McKinsey and BCG, and also Astro Labs, who are one of the leading incubators and support providers for the startups in the industry to help in headhunting and getting talents. So Khwarizmi now have agreements with Astro Labs, with Qimam program that is organized by McKinsey. We're an official partner with them. That gives us access to the top talents coming out of college to hopefully support our to recruit and help in matching them with our portfolio companies. So in a nutshell, this is the services we try to provide, and we obviously will grow the list as we grow, inshallah.
Wonderful. Yeah. And I'm very excited for you guys. We have some questions that have come in from our audience. There's a couple of questions, so if we can try to also address them quickly. I think some of them could be quick answers. So the first one, Khwarizmi's average ticket size and equity stake. You answered a range, but is there an average that you could add or anything that you'd add on this quickly?
So yeah, at Khwarizmi, we haven't closed the current round or like the current fund.
No,
So
I think
as of now,
the tickets that you're writing to the startups. What would be the average investment that you're doing? Yeah. Okay. Perfect. Sorry.
Yeah, I'm splitting the answer in two ways.
Apologies. My bad.
Before we close the fund, and after we close the fund. Nowadays, we are like the existing portfolio. We've entered with a range between $50,000 to $500,000. Majority of our investments are between $100,000 and $200,000. Post closing the funds, we'll be writing, inshallah, larger checks, 1 million plus $1 to $1.5 million, and with ability to do follow-on investments with the larger checks.
Great, awesome. Next, is there competition between private VCs and government investment in the region? And how is this affecting the VC landscape in Saudi?
So government investments has been set up in a way that they are complementing the private investments rather than competing with them. The way a lot of the government investments right now are either fund of funds or matching programs. So there is not necessarily a competition, but they are kind of a fuel that helped in injecting more cash into the VCs and into the tech ecosystem to allow them to do more investments and hence attract more founders to create startups, given that the money will be available.
So Abdulaziz, I'll add my own question on top of this. Do you think there's too much fuel right now?
I think it's a market that it will self-adjust. The more opportunity you have, the more lucrative and more opportunistic it will be for startups. In Saudi, for example, there is a lot of interest. I think that will I think time will adjust it, and at the end of the day, I think it's all for the best. I think it's the focus of government and spending right now is well addressed to the tech scene, and hopefully when we look back at it, it will be a great thing and a great decision that ignited and started a great sector for the country.
So I'll take another question, which is tying directly to this, which is they're investing in tech. Do you see opportunities to establish non-tech fast growth investment? Let's not necessarily call it VC. And here the question is sports or entertainment. Do you see there is an interesting opportunity in, let's say, private equity there?
Absolutely. And we've already seen these opportunities coming. The government started the tourism fund that supports in Saudi, that supports the businesses that want to invest in these sectors. I think there are many sectors that are growing so fast. Definitely, tourism and culture is picking up in Saudi. They've been ignored for a long time, and now they're catching up so fast.
In fact, I'm one of those customers who, as we were saying in the beginning, want to be a tourist in the new Saudi. So, or the new parts of Saudi that I've never seen. But I wanted to ask you the next question. What traits do you look for in the founding team?
Ambition, definitely perseverance and ability to manage through anything, determination, and honesty. To be honest, an honest founder comforts me a lot, rather than people who wanna, I don't know, not give direct answers. I feel like people who are just blunt and honest, they don't have time to play politics, and that will end up in them focusing and getting things done rather than I mean, they basically, whenever I deal with an honest partner or like a founder, it's much easier for me to deal with, and it feels much more. I feel much more confident working with them.
Great. I'm going to tack these two questions together. One, which is a quick one: is edtech an area of interest for you? And the second one is specifically about logistics. Since you mentioned logistics, what are you looking for when you invest in a logistics venture, and or what areas do you think are interesting within the logistics space? So edtech and logistics.
EdTech interested? Yes, absolutely. Unfortunately, we don't have any EdTech in our portfolio, but don't get this the wrong way. We are actively, as we speak, looking into two very interesting EdTech companies that we are very ambitious that something might come out of this. So yes, the simple answer is yes. In terms of logistics, there is also a great opportunity to support the wide growing e-commerce market with the logistics. One of the things that we see the need of is like the bullet deliveries, the same day deliveries. It's becoming more and more a need. The customers are being more demanding on faster and faster delivery. This is one of the things that we're looking at. Any innovative solutions when it comes to delivery, fulfillment. Also, we have also looked into interesting freight forwarding companies that might be also very interesting in the other side, like from the international logistics side. Yeah.
Great. I do have one more question, and I think it may not necessarily be relevant, but I'll throw it to you directly, which is about the regional franchise industry. Would you invest in one, and what do you think of the regional franchise industry?
So yeah, our mandate is basically tech-enabled companies, similar to most venture capitals. We target the 10x returns for our investors that are scalable without the necessity of entering and injecting a lot of capex investments. So the franchise, when it comes, for example, to restaurants or others, are not falling under our investment mandate.
Great. So there is one more question that appeared now. You know, I'm gonna give you my last question as well. Maybe this might overlap with that and really end with this. You know, I feel like some of us may have missed the investment train on some of these big trends that happen. Like if you missed investing in a cloud kitchen, or if you missed investing in a grocery delivery, I think some of those trains have passed now. What do you think is a train that we should be jumping on right now? The next opportunities that we should be jumping on right now? And if there's anything that you would comment on in health tech, the types of innovation that you think might be interesting in health tech, and then we'll wrap up with that.
I think the train keeps. There are so many trains that keeps moving, and everyone that passes opens the space for many others to follow. When we look at what's happening with, as you mentioned, the cloud kitchen or others, there are so many other sectors that are yet begging to be disrupted. Like look at the ed tech and the health tech basically comes at top of the list, where a lot of what have been happening in these sectors is the same as it was like for many years in the past, especially in our region. Obviously, COVID disrupted or like forced people to think about this. I think within the next decade, we will hopefully see more and more startups over there. Yeah, basically when it comes to trains, it's actually a combination between two things, between what sectors that needs to be disrupted plus what is available there in terms of startups that have the basic needs to take a company and take a sector and disrupt it. So as of now, I think the largest potential, if anyone was planning to start a startup, there's a lot to do in EdTech and health tech.
Abdulaziz, thank you so much for joining us. A real pleasure to have you. I thoroughly enjoyed the conversation, and your answers were both fun and insightful. And I hope that our audience also enjoyed this and got to learn a little bit more about Khwarizmi. Definitely encourage you guys to pitch them your startup opportunities. They're looking to invest. And I'll wrap up with an invitation. Our next Ramadan evening with a VC will be this upcoming Monday, the 19th, with Access Bridge Ventures. So we'll be looking forward to meeting the gentlemen who are running that fund. Thank you again, Abdulaziz, and thank you to our audience for joining us.
Thank you, Omar, and thanks for everyone who joined. I hope it was entertaining and insightful, and yeah, happy to take any other questions in any of my social media accounts if anyone has any unanswered question.